Wow, Bitcoin's back in the headlines.
Yeah, seems like it always finds a way.
This CNN business article you sent over by Gene Sahadi talks about it hitting like, what, $90,000?
Over 90,000 after the election. Yeah, crazy.
Pretty crazy. And you're thinking about maybe getting in on it?
I can see why anyone would be with those numbers.
For sure. But it's also kind of known for being a little, well, unpredictable, right?
Totally. It's had some huge ups and downs.
The article even mentioned that 75% drop. I think it was back in 2022.
2021 to 2022. Yeah, a lot of people got burned.
So before we even get to investing,
Yeah.
I kind of want to understand what makes it valuable in the first place. I mean, there's no like actual thing behind it, is there?
Not in the traditional sense, no. Unlike gold or something, it's all about supply and demand and this idea that it can be like a store of value, a hedge against inflation and this decentralized kind of currency.
Okay, so that's a lot to unpack.
Yeah.
I guess first, what does it even mean for Bitcoin to be a store of value if there's no government or bank, backing it up?
That's where the whole decentralization thing comes in. Bitcoin runs on this thing called a blockchain.
Oh yeah, I've heard that term.
Basically, it's like a public digital ledger. It keeps track of every single Bitcoin transaction.
So everyone can see it.
Exactly.
Yeah.
And that makes it really transparent and super hard to manipulate.
So no one person or group controls it.
Exactly, which is a big appeal for people who don't really trust the traditional financial systems.
I can see that. So it's kind of like this global digital ledger everyone can see, but no one can mess with.
Yeah, that's a pretty good way to put it.
And then there's that limited supply thing too, right?
Right. Only 21 million Bitcoins will ever exist.
Ever.
So it's designed to be deflationary,
Mm.
meaning theoretically, as demand goes up and supply stays the same, the value should increase.
Which is totally different from like normal currencies, right?
Huge difference. Governments can just print more money, which can lead to inflation.
Makes sense. So is that why some people see Bitcoin as like a safe haven?
It's a big part of it. They see it as protection against their own currency losing value, especially when the economy is shaky.
But didn't it drop like crazy a couple years ago? Didn't that kind of go against that whole safe haven idea?
Yeah, that's a funny thing about Bitcoin. It's designed to be a store of value, but its price is super volatile in the short term.
Okay.
Which actually makes it attractive to both types of investors, the ones looking for long-term gains and the more, risky traders who try to make a quick buck off those price swings.
So it's both a long-term investment and a short-term trading thing. That seems a bit confusing.
It can be, for sure. And that's exactly why you've got to know what you're aiming for and how much risk you're comfortable with before you even think about getting involved with Bitcoin.
Right. So let's say you're bought into this whole digital gold idea and you want to add some to your portfolio. How do you actually buy it? I remember the article mentioning something about virtual wallets.
Yeah, virtual wallets are basically how you store and manage your Bitcoin. Think of them kind of like digital bank accounts. But instead of holding dollars or euros or whatever, they hold your Bitcoin's private keys.
Wait, private keys now? That sounds a little complicated.
It can be a little bit, but it's a really important part of how Bitcoin works. Owning the private keys to your Bitcoin means you and only you control it.
Not a bank.
Nope. You're not relying on any third party.
So it's like holding actual cash, but digitally. And you have to keep it safe.
Exactly. Which is why security is like the biggest deal when it comes to these virtual wallets.
I can see that. So there's different kinds of wallets.
Yeah, different types, different security features.
Makes sense. So it's not as simple as just like downloading an app and buying some Bitcoin.
There's definitely more to it. Choosing the right wallet and knowing how to keep those private keys safe is crucial.
You don't want to just lose your Bitcoin.
No, definitely
Yeah.
not. The article talked about hot wallets and cold wallets, right?
Right. But it didn't really explain them.
Hot wallets are connected to the internet all the time.
Okay.
So they're convenient for everyday transactions. But they're also more vulnerable to hackers.
That makes sense. Then what about cold wallets?
Cold wallets are offline.
So like a physical thing.
Yeah, like a hardware device. They're way more secure, but not so practical if you're buying stuff all the time.
So you trade convenience for security.
Basically. And it really depends on your needs and how much risk you're willing to take. If you're just starting out and you don't have a ton of Bitcoin, a platform like Coinbase might be good.
They have both kinds of wallets.
Yeah, they do. Both hot and cold storage.
What if you're not really a tech person and all this wallet and private key stuff seems like too much?
There's a simpler way. There are Bitcoin ETFs now.
ETFs.
Exchange-traded funds. They track the price of Bitcoin. And the good thing is they're regulated by the SEC. So it's a more familiar and easier way to get into Bitcoin without actually owning it directly.
So it's like buying stock in a company that holds Bitcoin.
Pretty much, yeah.
Yeah.
You don't have to deal with those private keys or wallets at all.
That does sound a lot simpler for someone like me who's not a crypto expert.
Mm.
But wouldn't you still be affected by those price swings?
Of course. You're still betting on Bitcoin, just in a more regulated and probably less risky way.
Okay, so we've covered what Bitcoin is, why people think it's valuable, and the different ways to buy it. But the big question is, how much should you put into it, if any?
That's the question everyone wants answered. And it really depends on your personal situation, what you're trying to achieve, how much risk you can stomach,
The financial planners in the article suggested keeping it between 3 and 5%.
which is pretty conservative.
Hmm.
But Bitcoin is super volatile. Even a small amount can make a big difference in your portfolio, good or bad.
So it's all about being cautious and knowing it's a long game.
Exactly. It's not a get-rich-quick scheme, and it's definitely not for everyone.
But what about those huge gains the article talked about, like Bitcoin going over $90,000?
Some people have made a ton of money, but they were the ones who got in early and held on through all the crazy ups and downs.
So it's all about timing and being okay with risk.
To some extent, yeah. But it's also about really getting Bitcoin what it could be and what it can't do. It's not just about chasing the hype, it's about making smart choices for your financial future.
We've definitely covered a lot Bitcoin's history, why people think it's valuable, the different ways to invest, and how important it is to manage risk. What are some of the key takeaways from this part of the conversation?
I think the main things to remember are that Bitcoin is decentralized digital currency, and there's a limited supply of it. That makes it really attractive to people who are looking for an alternative to the traditional financial systems.
Right.
But it's also super volatile, so you need to really think it through and understand the risks before you jump in.
Makes sense.
Yeah.
That's a great summary. And in the next part, we'll look at the bigger picture stuff, like how Bitcoin could change the financial world and whether it's a bubble that's going to burst or something that's here to stay.
Looking forward to it. It's kind of wild to think about Bitcoin as more than just, those price swings.
Right.
The article talks about how it could really shake up the whole financial system.
Yeah, that's what I found really interesting. Like,
Right.
we're so used to banks and governments controlling money. How does Bitcoin even work without all that?
It all comes back to that blockchain thing we talked about.
Right.
With Bitcoin, every transaction is verified and recorded on this decentralized ledger.
Okay.
So it cuts out the middleman. It's like peer-to-peer digital cash.
So instead of like a bank handling my credit card payment, it's a bunch of computers making sure everything's legit.
Exactly. And because it's global and decentralized, it could make international transactions way faster and cheaper.
Especially for places with like unstable currencies or where it's hard to get regular banking.
Exactly.
I could see how that would be appealing.
Yeah,
But wouldn't governments kind of push back against something that challenges their control?
for sure. That's one of the big question marks with Bitcoin. Some governments are trying to regulate it, some are open to it, and others are just waiting to see what happens. It's a big geopolitical game.
Yeah, that's a good way to put it. The article didn't really go into it, but I was wondering about the whole energy consumption thing.
Oh, yeah.
I've heard Bitcoin uses a ton of power to keep the blockchain running.
It's true. Bitcoin mining, which is how transactions are verified, takes a lot of electricity.
So it's not exactly environmentally friendly.
That's a valid concern. There are definitely environmental trade-offs. Some people argue that renewable energy can help and that a more efficient financial system is worth the energy cost.
But it's not a simple issue.
Not at all. It's a debate that's going to keep going for a while.
So Bitcoin has all this complexity, the tech stuff, the geopolitics, the environmental impact. What does it actually mean for like the average person?
That's the big question, isn't it? On the one hand, it has the potential to totally change how we think about money and finance.
Okay.
It could empower people, make them less reliant on traditional institutions, and create new ways to build wealth.
But there are also those risks and unknowns.
Definitely. The
Yeah.
volatility, the regulations, the security concerns, the environmental impact. Those are all things you can't ignore.
That CNN article did a good job of laying it all out. It's not a quick fix, and it's not for everyone.
It takes research and a long-term mindset. If you're thinking about investing, start small, learn as much as you can, and be ready for a bumpy ride.
We've covered a lot today, the potential of Bitcoin to change finance, the challenges it faces, and the ethical questions around it.
Yeah, we have. What are some key things you'd want our listener to take away from this part of the conversation? I'd say the main takeaway is that Bitcoin is more than just digital money. It's a technology that could change our financial systems and give people more control. But it's not without its problems and risks.
Right.
And navigating this new world requires being informed and cautious.
Okay, so we've talked about the good and the bad, the potential and the risks. But For someone listening right now, what should they actually do with all this information?
That's the thing, there's no magic answer. It comes down to each person's situation.
It's not about jumping on the bandwagon or ignoring it completely.
Exactly. It's about figuring out your own finances, what you're aiming for, and how much risk you're okay with.
The article was pretty clear about one thing. If you need that money anytime soon, Bitcoin is not the answer.
All right, it's way too volatile for anything short term. It's got to be a long game if it's a game at all.
And even then, they said to keep it to a small part of your portfolio.
That core and explore idea is a good way to look at it. Your core investments are solid and diversified. That's your foundation. Then Bitcoin, if you decide to go for it, goes in the explore bucket.
So it's like a calculated risk, a little bet on something that could be huge, but not something you put all your eggs in.
Exactly. And even within that explore part, you have choices. If
Yeah.
you're not into the technical side, those Bitcoin ETFs are a more regulated and easier way to get involved.
That's good to remember. It's easy to get lost in all the details, but there are ways to make smart decisions.
Absolutely. And like with any investment, the more you know, the better. The more you understand about Bitcoin, how it works, what it could do, the better choices you can make.
This has been such a great conversation. We've covered so much: the technology, the impact on the world, and even practical advice for everyday investors.
It shows you how many layers there are to Bitcoin. It's not just money, it's technology innovation. A whole new way of thinking about finance.
That CNN article by Jean Sahadi really got us thinking.
It did. And to everyone listening, no matter what you think about Bitcoin, I hope this conversation helps you make sense of it all.
It's your money, your future, your decision. Do your research, understand the risks, and invest responsibly.
And if you want to learn more, keep digging. There's so much information out there, articles, podcasts, to help you really understand it all.
Keep asking questions, stay informed, and never stop learning. This is a whole new world, and it's just getting started.